hello to everybody joining us. I'm Ruth Edwards from the Private Staffing Division at Tiger, and I'm going to be hosting today's webinar on the future of London's super prime property market. I'm joined by our guest speakers, Alexis, Stellakis and Harry Helsby, both from Capital Place Properties, and also Claire Reynolds from the Prime team at Savills. So thank you guys for taking your time to join us today. We're going to be discussing the current and forecasted trends within the super prime market, and we'll be ending with questions that you've raised throughout the webinar. You can submit questions at the tab on the bottom of the screen, the Q&As, and I'll just go through those. If you've got a speaker that you want me to particularly address, please can you just mark that up at the beginning of the question, and we'll just go through those as long as we've got time at the end. If there is anything that you haven't had an opportunity to ask, or you've got any kind of comment on the webinar, by all means follow up with an email to tiger@tiger-recruitment.co.uk. So moving on to the speakers and introducing these guys. Firstly, Alexis Stellakis, who is the co-founder and director of Capital Place Properties. Your company facilitates the acquisition, redevelopment, and also the interior design of residential properties. And presumably, you guys have got an ultra high net worth clientele. Alexis, your background is as a principal investor and developer, and I presume that provides credibility and track record when working closely with your clients. Is there something that you want to add to that?
No, that's spot on. I was fortunate enough to sort of get chucked in the deep end about 6 years ago and worked on behalf of a family office. So they were a finance family. So if the numbers made sense, they were willing to let me sort of run with it. And, 6 years in a very difficult market after 2014, sort of, I gained resilience and credibility through track record. And then Harry and I joined forces and set up what we have now. Spot on.
Great. And then obviously that's leading into us meeting Harry. Harry Helsby, the other co-founder and director at Capital Place Properties. Harry, you studied at Inchbourne School of Design, and before you moved into the selling side in the residential market. And that then enabled you to have that offering of implementing design into working with a high-end developer. Is that correct?
Yeah, it was actually the other way around. I actually started as an agent, left school, came straight into the deep end. So then I sort of understood how to sell the properties, how buyers and sellers work alike. And then I wanted to, how to work out how to build these properties that I was selling. So for the good thing to do, go to Inchbourne, which is an amazing school I'd highly recommend. And did an architectural interior design course there, which then taught me to use programs such as SketchUp and CAD and bring my clients or our clients' visions to sort of, to life. And then work for a high-end developer after that. So kind of done both sides, the selling and also the designing, and that's sort of what we pride ourselves on now, is doing both of those all in-house.
Right. And then finally, Claire Reynolds. Hi Claire, you're director at Savills, also co-head of the Prime Central London residential team, and also the head of the Mayfair and St James office.
Correct, yes.
So I don't know if you want to add anything about your team.
Yeah, so I've been at Savills for 16 years. So I kind of started off in the Surrey market, so dealing with a kind of wealthy commuter belt there, and then have spent over the last 10 years working in the Central London team. So I'd say, a bit about Savills is we're a huge global business. The beauty of that and what we can do in terms of client offering is that we've got different departments, across London, across the UK, and across the world. So in terms of us delivering the highest possible prices for our clients, or being able to find the right properties for buyers, or delivering research, literally anything a client needs that's property related, and that goes beyond investment, everything, we can help. So yes, it's a hugely respected company, and we've got offices globally. So yeah, we're here to help in any way we can.
Great. So yeah, thanks all for joining us, and moving now into the questions. First question, obviously let's go in turns, but I want to hear from everybody regarding this, because it's pretty much what today's webinar is all about. It's about the trends that are emerging in the supermarket, in the super prime market over 2020. Supermarkets have had changes as well. Super prime market in 2020. What have you seen the trends emerging?
Yeah, I mean, I'm happy to jump in first on that. I think that people are it's a great year to talk about this, just due to what's happened this year. People are looking for places in their homes that they can work, they can base themselves maybe 2 days a week, but they're also looking for increased outside space, or bringing outdoors in. So I think, even on the design element, and Harry can tell you more about that. There's been some big changes there, and people want different things to what they're used to, and that's specific with the design. So Harry, I mean, I can pass that over to you for that one.
Yeah, no, I think that's been a key part of what we're trying to implement, is a sort of separating between work and living, and also a lot of natural light. I think we sort of found that people are changing their requirements on that, so we're trying to capture the element of light. And prime example is this property we're doing at the moment, where we've completely gutted the whole ground floor and taken all the partitions out, so we now allow light to shine from front to back, and it's also on a beautiful garden square, being Harrington Gardens, which also does help. So I think requirements have changed in that circumstance. A lot more outside space. People are stuck at home a lot more than they'd like, probably.
Yes.
Yeah.
And Claire,
I'd reiterate what Alexis and Harry just said. I think if you look at the super prime market, your buyers there's been a trend to buyers wanting to become more self-sufficient. So with COVID locking so many things down, obviously we're in lockdown 2 at the moment. Buyers want to be able to continue their lifestyles regardless of what's happening. So they want to have, there's never been so much emphasis on them having their own amenities in house, in their own home. So let's say gym, pool, cinema, parking, everything they want, and outside space, they want it all within their own home. And there was always a requirement there before, but it's never been so great as it is now as a result of COVID.
Yeah, great. Alexis, what sort of clients have you taken on this year? Have you, obviously you've got the offering on the design side, the acquisition side. Have you seen business coming in more from one area?
Yeah. We've been lucky, to be honest with you, this year, that both sides of the business have been utilized, in the sense that our clients have wanted both. They've wanted to really tailor their homes, and I think that has come as a result of what's gone on. I think that they've asked massively for unmodernized stock that we can then redevelop for them, and bringing the office home, the outdoor space, increased light. These are all things that tangle in. So I'm kind of repeating myself there, but we've been lucky on both sides. And we don't really expect to be doing that going forward, because that's a tall order. We want to focus on some key clients of ours on the acquisition side, and then really build the redevelopment side, and home in on that over the next 5 years. Right. But that's basically where we've been this year. We've been lucky in getting both, to be honest with you. But I think that goes hand in hand with what people want, and the fact that times have changed the way people are living and working.
Yeah, definitely. And Claire, we keep hearing about an increased demand for properties outside London this year. Obviously, again, affected by the pandemic. What's been your team's experience of this?
Yeah, we've definitely seen that. There's been a dramatic shift towards more space, and a lot of people have taken this time to reassess their lifestyles, and also I think it's difficult because London is, it's not its most vibrant at the moment. So, kind of leaving London doesn't feel like such a wrench for people because they're actually not leaving the London they used to love. So, but a lot of people are moving out of London, they're moving to the country. So it's really interesting if you look at, the demand stats, for example. So when the market reopened after the first lockdown, we saw a greater increase in demand from our country offices at 45% higher than what it was pre-lockdown. Right. So it shows that the massive jump in the number of buyers who over lockdown thought, actually, I really want to move out. Whereas London is still about 23% below pre-lockdown. So you can see that there's a really big disparity between demand stats for London versus the country. And I expect we'll see that continue for a while until London comes back to its former glory.
Yeah, thank you.
But what I would say on that, actually, interestingly, is a lot of people who are moving out, is it a knee-jerk reaction? Because some people just think, great, let's go out and get some space. But when the nights are drawing in and it's getting colder, and if they are coming back to their offices commuting, then there are quite a few lifestyle factors to bear in mind if you are going to make that move outside.
Yeah. Then, Harry, have you noticed a shift in desire for particular locations during the pandemic?
See, for us, it's been quite different because obviously our clients at the moment are all above the 5 million mark, which we found they want the best of both worlds. So these people have a place in the country, let's say Gloucestershire for the weekends, and they also want a place, in Mayfair or the city, because they're close to their offices. So we've sort of found, that they don't want the commute, and they want the best of both worlds. So I completely agree with what Claire's been saying. I think there's different levels to it. I know some people don't want to have to do that commute daily, and I know a lot of people also it's work from home. But I think everyone still wants, that ultra high net worth still wants a piece of prime central London, and we find that with our clients, definitely.
Great. And then Claire, across the UK, where are the hotspots for properties, and where also, on the flip side, where's the demand coming from?
So just touching on what Harry just said. So the Cotswolds and areas that are relatively commutable to London still, to kind of give that lifestyle that Harry's just mentioned, they've always been popular, and they're now even more popular. So if you look at so I'd say the Cotswolds, it's really interesting. So there are certain villages that you call kind of Uber villages, so within the Cotswolds and surrounding areas, and Buying Solution were recently quoted in the Sunday Times saying that prices in those areas have risen by between 20 and 30% since lockdown. So that kind of gives you a bit of context to where that demand is having an impact on pricing. And then in terms of where that demand is coming from, so if you look at the above 2 million mark, 38% of those buyers are coming from London. So again, you can see this massive shift of buyers kind of filtering out of London. And then it's, some are keeping a place in London, and others are just saying, look, we're just going to move the entire family, our whole lifestyle to the country, and then we may rebuy back into London at a later stage.
Okay. Also to Claire, are there any clear preferences on the types of properties in demand?
Well, in the country, no, actually, we're not seeing that. So there's, because there's such a variety of architecture, and we're not seeing kind of one type of property is more popular than others. So it just depends on what people's lifestyles are and how big they want to go in terms of, do they have horses, do they want a shooting estate, do they just want a lovely family home with the garden. But so we're seeing kind of consistent demand across all types of country properties.
Okay. Alexis, when looking for investments either for yourself or your clients, is there one particular rule you follow throughout?
Yeah, I mean, for both clients and for our company, when we're looking for developments, it's by best in class for us. I think that when we're looking and when we're advising, it's don't buy anything with a compromise, because if the market goes against you, it's going to be hard on the resale or for other factors. So I think that we have sort of strict rules in place that there's buying anything that's above first floor without a lift or on the lower ground without outside space. Just stick to best in class. The stock is small, so there won't be a problem with demand. So yeah, I think best in class, and you shouldn't go wrong, especially in these areas. So yeah, that would be our sort of rule of thumb.
Okay, and how does London compete on a global scale, do you think, when it comes to attractiveness financially?
Yeah, I think that, there's a lot of complaints about stamp duty, and that's understandable. Stamp duty really sort of knocks us out with a lot of the developments we look at. But when you compare it to the likes of New York and France, Paris in particular, they're paying sort of mansion tax and wealth tax. And also with regards to the holding costs, London is really competitive with regards to the holding costs. For example, if you're buying an 1,000 square foot flat in New York, you're paying anywhere between sort of 20 to 25,000 on New York City taxes. In London, there's a cap at 2,000. So if you're buying a £50 million house, you're still capped. And that's the same with France. A thousand square foot flat, it's about £10,000 worth of taxes. So holding costs, huge advantage. I think that's really attractive for the international buyers.
Yeah, I agree with that, Alexis. So we've done major research on this, and if you look at the transaction costs, if you look at if you look at buying, holding, and selling costs, then London is still cheaper than Hong Kong, New York, Singapore, Vancouver, Madrid, and Sydney. So actually, you've got some major cities that are much more expensive if you look at that whole kind of ownership journey than London is. So whilst, as Alexis said, we do kind of complain about our stamp duty, and obviously, international buyers need to bear in mind that that's going to increase by a further 2% at the beginning of April, but actually that whole journey needs to be taken into consideration in terms of buying, holding, and selling, and London still actually is pretty competitive.
Great. Okay, so now looking at external factors, Alexis, again to you. How do you think Brexit has affected the market?
Yeah, I mean, people have a tendency to sort of defer decisions when there's uncertainty on the horizons, and that's something that will continue, especially with discretionary purchases like second homes. People are just going to go off the effect that it's like, hold on, we'll wait until we know what's happening before we take that step. So it's been a big impact. But we're hopeful that we'll get a deal, and as soon as that uncertainty is gone, people will be flocking to the markets. Great,
Claire, anything to add to that? Or
no, I think you've covered that actually. I totally agree that a lot of people, when there is uncertainty, they will just defer. Whereas I think there's a lot of opportunity that's been opened up as a result of this uncertainty. So anyone who's got a slightly higher risk appetite, there are actually some really interesting opportunities out there for them.
Yeah, and then again with regard to COVID, how's that affected the market, and also probably even design of new developments? I mean, I think we've touched on this when you were saying about bringing the outside in, having to work, having your whole life under one roof, as it were. But other ways that COVID's affected the market?
I think going forward, if you look at the new build market, for example, a lot of the reason that people buy into new builds is because of all the amenities that they offer. Whereas I think any developer now should be looking at kind of future-proofing the new lifestyle that's emerged as a result of COVID. So, for example, people not going to the office as much, if at all, and putting really great emphasis on having kind of working space there, where whether it's kind of meeting rooms or kind of rooms where people can go and rent them out, or whatever it is, but having those facilities, those business facilities, the emphasis is massively on that at the moment. So I think for any developer future-proofing going forwards, I would say place greater emphasis on that than they have done in the past.
Yeah,
definitely.
And then, Harry, the design trends, focusing on going forward. Do you think this year has been pivotal for how interiors are received?
I think very much so. I don't believe that anyone could have predicted we'd be spending this much time in our homes, and we've played that into a factor in our most recent development, as I just mentioned. You know, it's kind of, it wasn't planned, but we opened up the whole place, and to allow, as we keep on repeating ourselves, but light was key thing. I think also, you know, this divide between work and living. I think that's become really key on trying to segment those spaces, and I think sort of going forward, especially for us, that multifunctional spaces are going to be the sort of most key thing in terms of layouts. And you sort of say bringing the outside in as well. As I mentioned, we've sort of been using green walls, green living walls, and that sort of creates this feeling that you're further outside. So yeah, I think it's a tricky one. I think there's a load of elements we can do, and I think it's quite exciting to have this, and it's something challenging, which you can work with in the space.
Great, yeah.
Just I guess following on from that, what we've also seen emerge, and just on that kind of design side of things, is branded residences. Again, we're going back to the new build market. So the demand for branded residences is huge. So you know, that sector has grown by 170% over the last 10 years, and 2020, I know we're nearing the end of it, but this is proving to be a record year for those as well. So with another 100 schemes being released in the market. So when I say branded, I mean, let's say, you know, 20 Grosvenor Square, which is branded as the Four Seasons. So those kind of new build developments. So and really interesting, depending on location, but those branded residences can achieve up to 31% increase in so premium on pricing as a result of being branded. So it's a really interesting kind of concept that's kind of really filtering through into the market at the moment. And I'd say if you look at the kind of global hotspots of you know, where those branded residents are focusing, it's traditionally Miami, Dubai, and New York at the moment, with London coming closely behind.
Yeah. Okay, so just sort of moving on now to a bit of advice that you would give. Would you say that currently it's a good time to be buying in prime central London? And if so, where would you suggest?
Shall I go first?
Yeah.
So I would argue yes, because actually, if you look at, you know, the peak of the market was 2014, and over that, you know, over the past, you know, 5-6 years since then, you know, prime central London has come off on average, you know, about 20%. So, you know, for anyone looking to buy now, you've got a 20% on average reduction in pricing. Plus, depending on which currency you're buying in, you know, you've got a massive currency advantages at the moment. So, you know, dollar-based buys, for example, they've been looking at up to 40% discount on pricing. So that in itself, London is suddenly looking like very, very good value. And also you look at, well, you know, what's the kind of forecast? You know, if you look at the Heathrow numbers, so pre-lockdown compared to now, you know, international visitors through Heathrow are down almost 90%. So it's huge. So if you look at areas that, you know, central London, for example, where it's heavily international buyers, above 5 million, it's typically 76% of buyers are international. Then, you know, logistically, those buyers can't come into London right now. So in terms of your competition against other buyers, it's really low right now. It's just domestic buyers or anyone who's going to take a punt and buying, you know, from overseas without seeing it, which, you know, at the values we're discussing today, it's, you know, it's less likely to happen. So based on the discount that you're achieving, plus the currency advantage and the lack of buying competition right now, I'd say now's actually a really good time to buy. And also, you know, if you look at the forecasts, you know, our forecast for the next 5 years is prime central London will see a 17% increase in values. Prime outer London will see 13% increase. So, you know, we feel like we're kind of, you know, bottoming out, and you've got a really exciting opportunity to buy in right now.
Great.
Yeah, and also touching on forecasts and sort of the recovery that's happened in the past in prime central London, you know, and after the late 80s and 90s, you know, London came back very strong, and, you know, post credit crunch as well, you know, it took a number of years, and we're seeing, as Claire mentioned, the forecasts are very, very strong, and yeah, we hold on to that.
Great. Okay. Harry?
And then also, actually, sorry, I'm just going to add something else there. Also, again, don't forget with, again, if there's any international buyers out there that, you've got the 2% surcharge coming in at the beginning of April. So, plus you got the stamp duty holiday. So, if you're looking to save costs as much as you can, which we touched on earlier, then between now and end of March is absolutely when you want to buy. And we expect in the new year, if you look at, we're on the brink of hopefully having a COVID vaccination. London, hopefully the travel is going to open up a bit more, and with other buyers trying to take advantage of those stamp duty savings, we're expecting to see a bit of a rush on the market early next year. So is now a good time to buy? I'd absolutely say yes.
Absolutely.
Great.
Yeah.
And following on from that, actually, we've got a question that has just come in about that from Laura Conduit. She's addressing this to Claire, and she said, where do you think the overseas pent-up demand is, i.e. which countries, and will the additional 2% SDLT rate deter them after the 1st of April?
Good question. So on the global side of things, I'd love to be globally as knowledgeable as I am on the central London market, but sadly I'm not. So I will need to defer that. But if you obviously if you take Laura's details, we can come back to it with our global research. But in terms of looking at the London side of things, sorry, I'm trying to think what the question was again about the 2% surcharge. Will it be a deterrent? So the it depends. I think they'll need to see value in order to. Can you guys still hear me?
Yep.
Yes. Okay, you froze me. I think those buyers will need to make sure they're seeing value for it not to be a deterrent. And also, I think because there's so much pent up demand, I think the extra 2%, they'll probably just try and take that off their purchase price as opposed to deter them from actually buying. So I think they'll just make them more value focused rather than not buy.
Yeah, I completely agree. Value and opportunity focused, and then in the prime areas, there's going to be opportunities, especially with the 20% haircut that we're taking at the moment.
Great. Okay. I mean, that's all that we've had come in on questions this afternoon. I think you've all been extremely informative, and I'm sure it's been really useful to everybody. Is there anything, just to sort of round off, that you guys want to add?
Nothing from me.
Mine, no, I think we've all been very useful in on Claire, who we know quite well as well. She's been helping us massively with some deal fronts and clients up in Hampstead. So yeah, no, I think from us that's all great.
And obviously, these guys are great to work with, and if there's anything that any of us can do to help any of the viewers or anyone who sees this this webinar subsequently, then please get in touch. We'd love to help.
Yes, absolutely.
Lovely. All right. Well, thank you to everyone that's joined us, but also special thanks to you guys. Thanks for giving us the time.
Thank you very much, Ruth.
Oh, no
Our pleasure.